It's time to start talking about profiting off of corporate greed. My name is Nikki Dunn. I'm a certified financial planner and registered investment advisor. And this is a topic that is a little bit inflammatory for some. Some people do not want to invest in the stock market because of corporate greed. But I'm here to explain the inner workings, why these corporations are greedy, and how you can look at this a little bit differently going forward to try to build your wealth the best way that you can. The companies within the indices are fighting inflation just as much as you and I are. So what's happening is inflation every year is either happening or not happening, sometimes more than others. And we can see historically that some years are worse than others, of course. But we have recently dealt with a big inflation spike where inflation hit almost 10%. That means that the costs of goods are becoming more expensive by the year. Now, this is a natural mechanism in our financial system. We expect inflation to happen, but at a lower rate every single year pretty consistently. In fact, the Federal Reserve targets a 2% inflation rate annually. But sometimes this gets out of control, and Americans end up in a situation where they are having a hard time paying their bills. Corporations have no choice but to raise prices in order to be able to continue to do business. Of course, we can sit here and argue all day over which corporations are taking advantage of this inflation and hiking prices more than they should, but let's put that to the side for the moment because we're here talking about how you can profit off of corporate greed, correct? So what happens is inflation causes corporations to raise their prices. Just as much as if you're a business owner, you're having to raise your prices if the cost of goods being sold are increasing, right? So business owners can really understand this concept pretty well. This leads us to corporate profits. We're looking at corporate profits in dollar terms. And over time, corporate profits are going up year after year after year, excluding recessionary years where profits come down because recessions affect the economy and the consumer's ability to spend. So, inflation is leading to corporations raising their prices. Higher prices lead to higher corporate profits over time. Now, we can also talk about profit margins. We're looking in this right side here of this guide to the markets from JP Morgan, and we can see that profit margins are also an important component that corporations are trying to have higher profit margins over time, but generally speaking, your margins can only get to a certain point with most businesses. But going back to corporate profits, when we think about the stock market and what these corporations are doing, they are doing their best to try to get shareholders value. So the discussion of corporate profits really leads us to the core reason why corporations work so hard to be profitable, to have positive, growing, expanding profit margins. The reason is because they want to give shareholders value. If they do not give shareholders value, their stocks go down. And a lot of these management teams have skin in the game. They own stock. Sometimes they have to own stock. Sometimes they don't. But a lot of times they want to see these corporations succeed. So they're going to work hard to do that because their own net worth depends on it. Not always, but a lot of times. So inflation happens, as it does every single year, sometimes more than others. Inflation leads to corporations raising their prices and having increased revenue to keep up. Corporations want to continue to have profits. They want profitability for their shareholders. So they're going to continue this process. And this is why the stock market is one of the best ways to actually beat inflation. Because as inflation is happening, these corporations are adjusting their businesses and their prices, and the stock market is going up over time because these corporations are literally built to have to keep up with inflation. Keep in mind, this can also be corporations putting in different efficiencies like AI or other types of technology that's going to help them increase their profits. So increasing profit doesn't necessarily mean that they're overcharging the consumer. It could also be that they're increasing profits from efficiencies that they've put into place. The stock market is essentially built for you to keep up with inflation, if not beat inflation. And the incentive of corporations and management teams to want to focus on the shareholders makes being a shareholder pretty darn great. And this is a chart of the S&P 500 showing returns since 1990. And this is going to encompass 500 of the biggest, most popular, widely known corporations out there. And a lot of these corporations do business internationally as well. So the S&P 500 really is a great benchmark for trying to figure out how the stock market is doing. For example, from 2000 to 2010, the stock market didn't do a whole lot in terms of returns compared to 2010 to now 2024. Of course, there was a lot going on from 2000 to 2010, like the 2000 tech bubble, where companies' valuations just got ahead of themselves. People just got a little too excited about some of the technology companies. And then there was the 2008 financial crisis. So that is what we call the lost decade of returns in the S&P 500. This can happen again. Yes, we can absolutely have another lost decade in the S&P 500. What's happened post 2010 is we've seen very loose monetary policy. Interest rates were very low for a very long time. That allowed corporations to borrow money for growth reasons. And now we have corporations that are major cash cows, lots of cash on their balance sheets, very healthy corporations. Not all of them, but the big guys that are really moving markets. The idea here is that if you are going to be an investor for multiple decades, long term, stocks are a great asset to invest in. While corporate greed is not a good thing, it is something that you can profit off of. Profits are not a bad thing. If you're a business owner, you need profits to be incentivized to continue to run your business. Otherwise, why the hell are you doing it? I do think that corporations that are raising prices way above where they need to be is a bad thing, but the market always fixes itself. And it does that by consumers like you and I deciding not to shop at those corporations or buy those corporations' goods or services because they're too expensive and they've just taken it too far. McDonald's is a great recent example of this. They raised prices too much. Consumers stepped back and said, whoa, Mickey D's, what the hell are you doing here? And they stopped buying, and Mickey D's sales declined. Chipotle, there's this big movement right now that Chipotle is not giving people enough meat in their burrito bowls for the money as they keep raising prices. So they're starting to go to Cava instead or other restaurants instead. Granted, Chipotle is still getting tons of business. The consumer has a lot more control than you think, essentially. Not in every industry, but in many industries. Corporations will always be trying to keep up with inflation. They will always be caring about adding value to shareholders and increasing the price of their stock. And therefore, you want to be on the right side of that. You can profit off of these corporations that are swimming in cash and profits. So the stock market shouldn't be something that you are avoiding investing in because you hate corporations. It's something that you need to be investing in because it's one of the best assets to help keep pace with inflation, if not beat inflation. In fact, the annualized return of the S&P 500 has been around 10.5%. Inflation has averaged around 3%. So that means that the S&P 500 returns are way outpacing inflation. So yes, I want to be invested in the best corporations in the world that are keeping pace with inflation by raising prices. They're focused on shareholder value. And for the people that think that the stock market is going to collapse and the whole thing is pixie dust and a facade, I'm here to tell you that stock markets have not gone anywhere and they've been around for centuries. I don't see the need for corporations going anywhere. You need your Apple to function. Look around you. Look in your house. Look at everything that you do and tell me that businesses are not the core of everything in your life. They are. They keep us running. They give us products and technology that we need. And so I don't see that going anywhere anytime soon. That's why I personally invest in the stock market. And these returns are taking into account the ups and downs of the stock market already. So you can't really use that argument. All right, I hope you found this helpful and it gave you a different lens to view the stock market through. If you haven't already gotten a copy of my book, Do This With Your Money, grab your copy in the link below. You can get all of my wealth management resources. I help do-it-yourself investors like you figure out how to do it better. I'm also a mentor in the wealth building community. I have built wealth management resources for do-it-yourself investors, and there's also an awesome community of investors just like you that you can bounce ideas off of. And with that, I'll see you next time.